Welcome to Trading Lounge and the daily US stocks for Thursday, March the 3rd. So as you know, the markets have firmed up a little bit and pushing a little bit higher. They didn't retrace as much as I thought that they would. As an example here with Apple here, they didn't pull back into their 50-60% retracement level areas. So yeah, so I guess we just have to move that up to that particular point and just track the market to see how high it goes. Now this is on 2,000 ticks, so we've been looking at the S&P 500 and stocks with their wave 4s being in, but we've also been looking at them over this way as well with a bigger wave 4 that can open up. So that's okay, but because they're broken through the top here, today we'll just focus on the moves to the upside. Okay, in this particular case here, the 61.8% next one is at the 172, and also too here is that when we had this wave 3 here, it began in group 2 here, so at 180. It's called ADA profit taking number, and then we have 65 and 72. So it's basically clawing its way back up in here again, which is good news. I'm going to go from 2,000 ticks to 100 ticks. And we were looking at a short position here and also a long position. So the long position is the one that's held out here. So we need to put a stop in here. So we can look at, I'll label this wave 1 here and 2 here, but at the same time I think it's important that I also look at it, copy text, that we also look at it as an A wave, so we just don't get lost in the hype, because we know that the other 61.8% is up at the 72 there. And yeah, so where can we put the stop? So even though we got that little spike there, it's probably the case where we've got 1 and 2 in here and 3 and 4 and 5 here with an ABC here. So our first port of call would be here, and then we've got the next structure, which is 1 and 2 and 3 here and 4 here, and then we can see the market creeping here a little bit. So I think that could be like 1 and 2 here, then 1, 2, 3, 4, 5 here. So that would be like a third wave here, and then a fourth and a fifth wave, and then we would have a sharper ABC correction coming back. So if I took it to the 168, because we always call ADA profit taking number, so that could come in quite nicely at that point, thereabouts. So that would leave the 50-60% retracement level back around here. So we would need to weather that storm. So, normally I would put it, here, well, first of all here, here, and then here, but here's a little bit close to this one here. So I think for the time being, we best just keep it safe. Like I always say, instead of getting the stop too close, then you're better off taking money off the top. Let's find this little tool here. So obviously you don't have to wait for the 168, but if we just put a percentage in here, that's for the short-term traders that, because you could take some off here and get back in over here, you know what I mean? So that would be managing it. Some folks go for the longer haul, some for the shorter haul. But anyway, I just make suggestions, and yeah, so there we go. Obviously at the end of the day, you need to make decisions, and you need to be responsible for everything. But anyway, that's where we are. So that's Apple, and with Amazon now also had this going down. We also had a short trade looking in here, but you would have to say that the little spike through here is not support, is it? So, we could put the short trade under that and then wait for that to be breached. That's the normal thing. Now this little move here, you can see that it's in 3 waves. Okay, so we've got an A and a B and a C here. So I can give these a bit of a switch around. In fact, I'm not going to use those ones. I'll just leave that there though. But most of the markets that I'm using that are going to the upside, I'm looking at them as 1s and 2s here of this degree. So I will put that in here on this. So in this case here, you know, that would be an A and a B and a C wave here, only if the top got taken out. If that pushed up here and took that top out, then that would force that, because it could be down for 1, back for 2, down for 1 and back for 2. I've already had that there somewhere, and you know, and come down again from that point. So that's the risk if you get in earlier here. So if you're going to get in here, then you know, because we don't really, I mean, we have the only foundation that we have for this to go up. Well, there's a few really. This is quite a good impulse wave, and this does look corrective, but that's not proven corrective yet. It would need to take that top of the B wave out there. The other markets like Apple are leading to the upside, and they have taken their top out here. So it probably does warrant a little trade in here, but I think that what we could do is just make it smaller. And then you'd need to keep the stop under here, under that low, or the second low in there would do the trick. And then this one here is the that would confirm that as corrective, and then we can move from that point. Okay, so I'll just plonk those there, but I'll just leave the rest of it there. And you know, I mean, at the end of the day, we should see something of the same sort of equality in terms of the previous trend. So anyway, fingers crossed, let's see how we go. We don't want to over risk it, and we kind of, you know, gathering the evidence, we're above the level. It does look corrective at this point, so yeah, it's looking good. Will it survive and will it push up? Well, we never know, do we? You know, so unless we've, you know, all I can say, if it takes out that top, it's forced that to be corrective, and then we're on our way at that point. So let's move on to, we can do the same with Google here as well. We already had this one in here. You could go in early if you wanted to. Once again, we didn't get that pullback here, so I'll push that up there, but I'll leave that there just in, excuse me, just in case we get something like that's possible, you know. But once that top's taken out, then she's good to go at that point. So I'll just leave that. So it's kind of the same story really. This is Facebook here. This is a bigger picture here. In this case, I've got wave A here. I do have a count that has the low in place here, and that's possible. So we could put a wave 1 here, but I'll just dull it out because my bigger picture has got it going down further. But yeah, I mean, you know, we can be a little bit optimistic, but once again, we've got a nice A, B, and C here. But what I wanted to point out here, though, is a bit the same, well, same as Amazon. It's not an A and a B and a C until it takes that top out here. So, and if we're looking at this top here, then we can look at a classic trading levels pattern over here. From the major trading level, the next space up, we've got 10, 20, and 30. They make up group 1. Okay, so in this case, I've just highlighted this here. Now, because between 200 and 10 here, we can count the numbers 1, 2, 3, 5, and 8. And when we talk about 8, we talk about group 2. So there's some other levels in there. From this high, I think, to this high, that's the 61.8%, and that's where it's stalling at the moment. Once again, we can look to count this to the upside. It's kind of there as a wave 1, might be a little bit more. We could probably look at all of that as 1 and 2 here, and 1, 2, 3, 4, 5 for the third wave, fourth wave, 1, 2, 1, 2, 3, 4, 5. There may be another little push there. But what I was thinking, if you wanted to get in early, if that is a little wave 1 coming up here, now it might go further, but if you get a little pullback here, you know, that kind of breaks the trend line a little bit, you know, snaps out of that, you know, so like this here, this whole thing here, this move up here and the correction here, this is broken out of this trend, hasn't it? You know, you could say that this wave 4 is broken out of the trend if you took it to that point, and that's what we could say with this little guy here going sideways. So I think that little guy going sideways is this bit here, so we still need that, and then we need that. But when we do get that here, then you can bring that top down over here for that, and then get a position here, and then get a position above that. That would be reasonably safe. Once again, if this is a corrective move up here that we were looking for in the bigger picture, we can get some sort of equality between this length and this length. But once again, all looking quite good here, and the fact that Apple's taken the top out there is sort of the leader of the pack, and the others can tag along. Microsoft has just popped its head up over here. Now, we figured that this was an impulse wave here. That was quite nice. But it's always nice to, you know, have the closest, largest number as support. So I'll just leave that with you there. You just need to be able to recognize what support is, and it's not always easy. So like when it first came up here, it's quite volatile, really. That's where all the big orders are, around big numbers, you know. But that's where Group 2 and Group 1 come into play here. So that's really good. So Group 1 is. Group 1 really, if we're talking about, we can put in 65 here and 72 in here, and that would make up, Group 2 below here, 65, 72 and 80. And you can see here that, you know, if we plonk the 72 in here and the 65 in here, I might as well do that for the time being. You know, that's basically supporting the market here to the 300, isn't it? You know. So it's doing its job for the downside here, and on the upside here we would have 10, 20 and 30. Now that would be of the same degree really. So all of this here is the swing range for 300. But if we're going to be building up here, then we can break the fractal down a little bit further. So what would be the next? What would be the Group 1 within this one here? Well, we can count 10 to. Here we can go from 300 to 10, so we can also go the Fibonacci numbers again. The sequence is 1, 2, 3, 5 and 8. So what we could do in here, if you're looking to build, you could go into 1, 2 and 3 here, and 2. It would be good to go to a smaller time frame for this, and 1 here. Now the importance of this though is that if you get, you can kind of see that it's there, you know. So if we got support on top of the 3 there with the little classic trading levels pattern, that would be helpful, wouldn't it? You know, and also 2 here that you would also be looking for. You know, this is 2,000 ticks. If you go to 5 ticks, it will become much clearer. But you know, once again, we could look for 5 waves up into this move here, and then we may end up coming back again in 3 waves. You know, it might be something like that. You know, and then pushing up, and all of these here, 1, 2, and 3 here, they all have little classic trading levels patterns. So you might be able to build in over here on that. You know. On that B wave, so we've got 5 waves coming up here, because that's what we're looking for in the last ones. We've probably got 1 and 2 in here, 3, 4, 5, and then wait for it to pull back, and then you got the B wave to move in. And when you move in on the B wave, then you can build in on 10, 20, and 3, 1, 2, and 3 here. And if you get support on top of 3 here, well, then you can build in again at that point. Now you might say, well, Pete, that's a lot of fluffing around there, man. You know, well, the point being is though. You know, new traders think of how much money they can make, and professional traders think of how much money they can lose. So it's really all about focusing on the loss and not the profit. And when you're building in a trade here, if I had, you know, I don't know, I say 100 shares to buy or something, say 100 shares. So I could say to myself, all right, well, I can build those 4, I could divide those 100 shares into $25 25 shares each, and that will be my first one, and then I'll get one on 10, because then as I build up through here, I can manage my risk better, because on this first one here, when I click that out there, I have to put the stop under the last low here, so it's sort of safe, because there will also be a little wave 1 going up here as well and wave 2 coming back. So I need to put my first stop under here, and that needs to be a 1% risk. So my job next is really to get that at 0.5%. So how do I do that? So I think, well, 1 is the strongest number, so if I can get 301, if 1 becomes a tested support, because over here it didn't become the support, do you know what I mean? And you could have got caught out here, and that might happen over here. But if 1 becomes the tested support with the classic trading levels pattern, then I could move my stop up, perhaps, still keeping it under the 300 for the time being, but move it up somewhere in this space, and try to halve that 1%. That's 0.5% I've saved at that point. So that leaves me another 0.5% risk to be able to put in. So I could get a classic trading levels pattern on the one, add another trade, move this, and have the 2 stops sitting under the 3 here, and then I wouldn't personally move. I wouldn't move the stop into group 1 here until the number 3 here has got tested support with a classic trading levels pattern. So when that trade is triggered, then you can move them up, straight up under 2 here. So between 1 and 2 you can move. Don't put them on 2. You always break it down. Always think of 10, and halfway between 10, between 1 and 2, for example, there's 10 points in there, right? So you know that 1 is the strongest number, so the 1 and the 2 are both really 1s in a way. So then you got in the middle there, you've got the halfway mark between that, which is 5. So you're either under the 5 or above the 5. So always ending in 2 or 6. So above the 5 or below the 5, 2 or 6. So you keep breaking it down, and over a period of time, that works quite well. You start to get an edge then, Okay, so just moving on quickly. So we talked all about that yesterday, didn't we? Here we had a really good explanation here about all this. So we came to the decision that would go to 841.42. So we survived that, and it was tight, but we survived it. We took a balanced view and took everything on board and everything. And so once again here now, we've got the same thing happening. We've got the A, the B, and the C here. So hopefully we can push up at that point. And also too, if that's going to be correct now, we can take this stop and we can plonk it under this one here now. Because if that's going to be an A and a B and a C, then we should be moving up from that point. If that's going to come down, well, we don't want to be in the trade anyway at that point, So, I've got another position here, but yeah, doesn't mean you can do whatever you need to do. Otherwise, we'll build on top of this one over here. But this will be part of a classic trading levels pattern. Is this the arrival here? It didn't quite get there. I think we need to take it as the arrival until proven otherwise, So basically what could happen here is we could go up to here and then have some sort of mucking around here and then moving up at that point. So we'll also need to, if you're going to keep on going up here and adding, do we need to move the stop any closer, or what do we do? Do we take money? Like this trade here, that could be taken out at the 900, and then we just wait, and then we could pull back in. We'll keep this one. We've already taken some percentage, that type of thing. But anyway, this is really in line with everything else going up. Slightly different. I've got it counted slightly different, but I'll just stay with this at the time being. I can see how it could be 5 waves up as well, so I may adjust that. And square is much the same as well, so we've been counting 5 waves up here. I'm just going to go to, this is 1000 ticks, I'm just going to go to 100 ticks just to get a bit more definition in here. Now, it's a little bit odd because the other markets are pushing up. I was looking at this correction here, and looking at it as wave 1 with an A and a B wave, that looks good, and then 1, 2, 3, 4, 5 for the C wave here. So in this case, it looks like we've got one more little move down, unless I've got this counted wrong here, but I can't see how. See, between 2 and 3 here, we can see sometimes you can't count all the waves, sometimes you can identify things. So you can see that this is the fastest in here, so that's got to be the third wave. So then you can work 1 and 2 in here, and 3 here, and 4 and 5. So I'm thinking this is like wave 1, A, B, C for 2. That's all quite fitting, and then 3 and 4 here. And with wave 4, that would pull back 38.2% at the 50% here. So if it goes any higher, then it'll probably just continue higher. But otherwise, we could expect it to come back to the 18 area here. That's group 2 here. So when we're thinking of 20, we've got 10, 20, 30, which is all of group 1. And of course, if we get support on group 1 here on the 30, we'll go to the 50 at that point. And this is also a classic trading levels pattern at this level. So when a market's pushing up here, normally the lowest they come back to is the 15 here. That would be the lowest it would come back to. So it's likely to come back into group 2 of the 20 here. So that's the 18 here, and then we've got 16, so 16.5, 16.50, that's the lower end there, and then we've got the 72 in there, 17.20, just near enough. You get the idea. Anyway, it's all pulled in over here as well nicely. So look, this could move down from here. Obviously, don't kind of want to go long here, because if I look at these lows here, I'll put that at 125, because that's really where that's at there. So that all of these lows here are going to be the resistance here for this, you know. So if you're going to go long here, normally you'll go long above the B wave here, but we can see that the 125 halfway between 20 and 30 here, we know 5 is the second strongest number, so the halfway mark here. If we got a classic trading levels pattern on that, just say that the market went straight up here and didn't pull back here, I'd expect it to pull back, but it's, you know, above the 40%, so at 50%, which is fine. And we could look at this as an A and a B, and then 1, 2, 3, 4, 5 diminishing here, and then pulling back here for this, you know. Either way, if that pulls back into here, then you can buy it at that point, but only a small amount, because it's still at risk. Even though we're calling it an ABC, it may not. It may go into a bigger bear market. But if it was going to be an ABC pattern, then you could buy above the top. And if it just pushes straight up from this point, if it comes back down here, then you could buy it at that point. Or if it moves up at this point here, then there's going to be a little classic trading levels pattern here for sure. And why I say for sure is because there's not too many things, because the supply is over here on this. So yeah. Anyway, you got the general idea for all of that. I'm just going to move that over there. That will be our first step. And of course, we want to move that one up over there. I don't need all these lines in here. We've said our piece. We've said our piece there. I'll leave that there. But that's where square is at this point. Rightio. So I was having a look at... I won't do all the banks today, but I was just looking, because they broke new lows yesterday, you know, it's got me sort of thinking a little bit. So I went back and had a bit of a look at it. So I think that we could, I don't know if this is true or not yet, right? So I'd still need more time to figure it out. But we're not going to go in and buy the banks at the moment, because, I mean, they're probably at their lows. It's probably the perfect time to buy them, and I'm worried about nothing. But this is another count here where I could have a larger wave 3 here and 4 here pulling back to this wave 4. So this top here, we can look at this as an A wave, a B wave, and a C wave coming down at this point. So, but anyway, I just sort of wanted to put that out there. It may not be the case. And if we see a nice impulse wave up here, well, then we'll work that in line with the S&P and so on. But because they broke new lows, I had to kind of think about, give them a bit of a rethink, you know. So anyway, that's that. I won't go into the rest of them at the moment, because I've spent too much time waffling on other stocks, which is okay. And there we are. Alrighty. Thanks for tuning in. Cheers.